Hello, everyone. I'm MIchielle Freeman, Realtor with Edina Realty,
I'm Steve Mohabir, Edina Realty Mortgage Consultant.
and you're watching Tea Time Tips. How are you this fine day, Steve?
Doing very well. Beautiful weather for the last week. Been great.
Awesome. Well, the real estate market, usually this time of year, I'm slowing down a little bit. That has not been the case right now.
That's
I'm
okay.
going to take it. It's an
Sure.
observation, not a complaint.
Right.
But one thing I have noticed is that my buyers are continuously going back to you saying, the rates, where are they? What are we doing? And it also raised a couple conversations with me and my buyers. One, I will just sort of title the anatomy of an appraisal or of a interest rate. Like, you see when the rate sheets come out, you see one number on the left, you see another number on the right, and how do you get there, and what do those terms mean, and why are they different? And then maybe also on the rate sheet, it's always talking about the different types of loans and the percent down and things like that. So I was hoping you could shed some light on that for all of us.
Yes, everyone likes to talk about rates, mainly.
Mhm.
But so when we send out rates and things, there's two numbers. There's the interest rate, which is what the loan is amortized at and how you
Okay.
calculate your payments. And there's a column usually right next to it that says APR. And
Mhm.
APR is the annual percentage rate, how much the money actually costs you yearly. So that adds in closing costs, that adds in mortgage insurance, that adds in affiliated business, how much money the company that's doing the loan makes off of you over year one. I always tell people, if you spend an extra dollar, if you pay some extra down throughout the year of your mortgage payments, your APR is all out of whack anyway. So the gauge for closing costs is typically APR, and the gauge for interest rate is interest rate. So you want to watch that.
Got it. And so that's why we see the difference. So let's talk about and we've talked about it before, but I think it's really important right now, especially as the interest rates are doing what the interest rates are doing, how that depends on like how much percent down and that sort of thing that you're taking into consideration.
Absolutely. So if someone asks me the question, what are interest rates today? It's actually a really complex answer instead of an easy one, because interest rates change throughout the day. In particular, in the last 4 weeks, they've changed multiple times in days, up and down, mainly up. But the things that factor into interest rate, what are the credit scores we're talking about? What type of property we're talking about? Is it a condo? Is it a single family home? What's the occupancy look like? Is it a primary residence? Are you going to live there? Is it a secondary home, cabin? Is it an investment property? Those things matter. Down payment matters to interest rates. Loan size matters. Is it a jumbo loan, which has currently better interest rates than regular loans? Is it an FHA, VA? All those factors go into it. Credit score probably being the biggest factor, but property type and occupancy really matter as well. So there's a lot. It's a complex answer to a very simple question. But most banks, typically when we quote those numbers out with the APR and such, will quote, there'll be a disclaimer. It'll say, 25% down on a $300,000 single family loan, something to that extent. So you really want to watch the details, because details matter.
They do. I'm always surprised at how often people are comparing loan products, and one lender has given them a very detailed, such as yourself, estimate of what all the numbers are going to look like for them, and others just sort of roll with, "Oh, I'll give you this rate, go for it." And I oftentimes am saying, "Yeah, might want to go back and have them detail that out for you." So, anything else you see on the horizon that we need to be keeping our eye out as we maneuver through this interesting time.
Yeah, with that APR look, points have come back and back strong because rates have moved up. Points are back in play when people are looking at long-term in the house. Can we get our interest rate lower for that long-term? Can we pay more fees up front to get that interest rate lower? Absolutely, you can. And it's actually very common. I would say 6-7 years ago, the trend was 1% origination fee on, for mortgage fees. That it has moved away from 1% and went to 0% because rates were so low and the buy down didn't really make sense. But now we're back to where rate buy downs, discount points really matter.
So just to make sure I'm understanding and our audience is understanding, when you talk about a point, you're talking about additional fees that you can pay up front to get a lower interest rate and still move forward with a lower interest rate.
So 1 point is 1% of the loan amount. So if you have a $300,000 loan amount, you're talking about $3,000 in extra fees.
Got it.
And that may buy your interest rate down a quarter, or sometimes it's a half, and sometimes it's 3/8. So there's ways to get your interest rate down for sure, as long as you have the funds to do it.
Yeah. Well, that's all good information, and that's why I keep coming back to you. Great answers. So I appreciate all the knowledge you helped share with all of us out here. Any questions for me today?
Well, you said you're busy. What's hot right now? What's going on?
I have been surprised. It's sort of popcorny. Things that I thought were going to move quickly are moving a little slower. Things that are moving faster, I thought would move slower. So there's a lot of unpredictability right now. The first ring suburbs have still been super hot. But one thing I am seeing, and it's hard to articulate to buyers until I have an example presented in front of me, is sellers are asking some very interesting, non-traditional things or asks of buyers. And, people oftentimes think of sellers market and they're like, oh, well, they just want the highest price. I was like, no, they're asking for other things. So a couple examples I can give you that have happened over the last couple weeks. A house in Powderhorn. My buyers wrote on the house. It went in multiples, of course. I'd been in conversation with the listing agent for like several days. And finally, on like the third or fourth day, when it was like coming down to the nitty gritty, comparing offers, they were like, well, the sellers would really like the buyers to assume the chickens.
I would like that.
I mean, yeah, South Minneapolis, first time buyers, like they weren't really into the chickens. So, it's things like that, requests like that it's hard to explain to buyers that no, sellers are asking for some interesting ideas to help get the deal done that makes it advantageous for them. The second one that I'll leave us with is seller went into multiple offers, got 9 offers on the table. We knew that we were going to be up against people that didn't have inspection contingencies in their offers. I am of the thinking that I like an inspection. There's just too many things that could come out of that. So I encourage all my buyers to do inspections. But what I have come up with is a pass-fail inspection. So basically, you do the complete thorough inspection, you do your due diligence, you don't ask the sellers to tackle anything that you see in the inspection. You're just making sure it's structurally sound and that you can get it insured. And and then move forward. Seller doesn't have to worry about any more money coming out of their pocket, nickeling and diming them. It's great. Well, these particular sellers liked the offer, came back to us, wanted to work with us, and they were like, well, we just want to keep 50% of your earnest money if you should decide to walk away from something other than a major structural find in the inspection contingency. And, it just, the buyer has the right to walk away during inspection contingency, and they don't really have to give you the reason. So, my conversation became to them, who gets to determine what a major structural thing is that allows my client to walk away without losing their earnest money? And do you want a copy of that inspection report so that you then have to give it to future buyers and everything in it? So can't make it up. Keep smiling.
That's so much fun. And it brings me back to when I bought my house. When we were looking at houses, I should say, we put an offer on a house, and we didn't have a true inspection. We had a contractor come out to one of the houses we put an offer on, and realized it was going to cost a lot more than we thought, above and beyond how we wanted it. And we walked away.
Yeah.
And that was the end of it. So I get that philosophy, and if you're ready to do that, that's great.
Yeah. So
a little more power and control or something, right?
Yeah, it's interesting. It's just interesting. I'm writing a book. I'm compiling the notes for my book. So, good information all around the conversation. I'm MIchielle Freeman, Realtor with Edina Realty.
And I'm Steve Mohabir, loan officer with Edina Realty Mortgage.
And you've been watching Tea Time Tips.